crap the bed. I don't know what's going on, but I'm here. You're here. JC is somewhere in the car right now, but I got Strazza. So that's the plan for the day. We got Kenny Polcari. Oh, can you not hear me? Hold on. Hold on. I know. You guys can't hear me now? Oh, boy. I'm having myself a morning. Screw it. I'm bringing Steve on.
You're right.
Can you not hear me?
No, I can hear you now. I think it's more of a lag than anything.
I don't know what's going on.
It's all right.
Are you? Whatever. We're starting the show. Forget it.
So, how was your weekend, buddy?
I don't know. I have no idea what's happening. It's been a while since I've had this. My computer just. I don't know.
So JC's out for a day, and all the tech breaks.
Dude, I
get that right.
Can you even hear me? You can, right?
I can hear you, but
dude, I have no idea what's happening. My mixer is on the fritz. Yeah. My other microphones, I can't find the wires. It's a crazy morning.
I feel like you're Skyping into today's video like circa 2008.
Oh man. Did you have a good weekend?
I had a great weekend. Quiet. Watched a lot of football yesterday.
Good.
Yeah. How about those Jets? Can't wait to talk to Kenny.
Oh boy. Yeah, he's gonna be in a mood today. Actually, no. He made money because he bets against the Jets, so he'll be happy.
The Jets fade was great. You could have got the Colts like getting like a half a touchdown and a half yesterday at one point in the third quarter.
It was touch and go there for a minute, but they eventually pulled out the loss. All right, Kenny Polcari is the guest today, as I was saying. Dual Kenny show: Kenny Glick, Kenny Polcari, and
Jason later,
and Jason. So that's the plan. So should we just do a state of the markets?
Dawson had a shitcoin Saturday.
Oh boy,
nice. Yeah, we'll talk about that. We'll talk about cryptos.
All right, let's do it.
All right, we'll take it from the top here. Starting with cryptos, I'm going to try to read down JC's morning watch list. Bitcoin, basically flat. Same with Ethereum. Dow Transports, down on the day. Dow Industrials, down 0.7%. We have the Russells about flat. Nikkei is up modestly. Aussie yen up a little bit here. A little movement in the VIX, up 5%. Dollar index flat. S&P futures more or less flat, down 0.15%. NASDAQ up modestly. Aussie yen or Aussie dollar flat. Pound euro up a little bit here. Nat gas up 4% this morning. Copper up a little bit. Silver up a little bit here this morning. You know, precious metals got really killed following the election. 2 weeks, you know, let's look at something like gold was down 2% and then another 4.5% last week. So 6.5% over the course of the last 2 weeks. Silver's digging in here. I think that's interesting because if you zoom out on silver, Spencer, you go back to the 2020, 2021 highs, it's right around $30. So what you're seeing right now is they're flipping former resistance into support. And that's probably really constructive for the longer term trend in precious metals. So that looks good.
Well, in gold too, right? Gold's right back to where it had been.
Gold, yes, but you don't have that like giant polarity zone in gold because it's already kind of left the station, right? And run a bit from its breakout level. Silver's still right there. I think you could really define a trade really well with a huge level of interest right here at the current prices in silver. And there's also that catch-up element, right? Silver versus gold. I like that too. And then what's the bond market doing here? So interest rates more or less unchanged on the morning. So really a sleepy Monday morning. I would say in terms of crypto this weekend, really a nothing burger. a little bit of volatility, but they didn't really go anywhere, right? You continue to see funky names, funky tokens down the cap scale, kind of having their moment. It was like Hedera hash graph this weekend, the H bar. So H bar, let's take a look. Wow, it was up 26% Saturday, flat yesterday, tacking on another 32% here today. That's the H bar. The metaverse names, it's funny because we were just talking about them last week for the first time in I don't know how long. Sand was up 35% Saturday. And the other one is Mana, Decentraland. JC has a mansion there. It's vacant. 25% Saturday in the Mana. So you're seeing like these rippers from some of these coins. I think Sheeb's going to go. The Floki. These meme coins still look really good. Bonk has been on fire. Bonk's been the best one in my portfolio, really outside of Doge since the election. So they keep running the cryptos. And I think the biggest deal right now, I got one chart, and then we'll get to whatever headlines we have and some Kenny. Throw this up because this is really the theme right now. Growth is, I guess it's not a factor. It's not really a thematic. It's the largest area of the global stock market. You agree? Growth stocks. I don't even need to check the numbers. Okay. Definitely in terms of market cap. As such, there's always this key question among investors and even traders. Some people just call themselves growth stock investors. They won't even touch anything that's not growth. But then even after you make that leap, there's this big question of, well, which ones? There are so many growth stocks. Biotechs are growth stocks. These pre-revenue companies that are going to space, technically growth stocks. Microsoft is a growth stock.
Different flavor of growth.
It's growth, it's quality, and it's value sometimes.
Yeah.
It's not value right now.
It's a different flavor. Yeah.
It's not value right now. But the traditionally growth stocks, Spencer.
Yeah, traditionally, sure.
Sure. Would you say Nvidia or Supermicro are those growth stocks?
Definitely.
Shopify, DraftKings?
Definitely.
Palantir. Palantir is a growth stock.
Definitely.
Not cheap, from what I hear. So this ratio, think of this as speculative tech versus quality tech. Think of it as little tech versus big tech. Young growth versus old growth. Startup tech versus, legacy tech. This is the ARC Next Generation Internet Index. It's just a representation, right? I could use other ARC funds. I could use the IPO index, right? I could use different kind of benchmarks. What I'm looking for is speculative tech in the numerator, and then large cap, mega cap growth, more quality tech in the denominator. So I'm using the NASDAQ 100. If I used XLK, large cap tech, it'd be the same thing, right? So this is for illustrative purposes. We're seeing this pattern, this formation, whether it's one form of speculative tech index or another one versus another form of large cap tech. Does that make sense? This is a big theme. These are the new leaders. People are out here complaining about my semiconductors are rolling over. Are you in Square or SoFi? Forget the semiconductors, right? New leadership has emerged. The new playbook is very clear, and this is just getting started. And this is also something that happens in a market that's experiencing improving participation, right? Or broadening of participation. Speculative tech over large cap tech is the new playbook. These are the names: PayPal, Affirm, like I said, SoFi, Shopify, Palantir. Coinbase falls into this. Coinbase is a huge holding. Tesla.
Okay. So in other words, we have progressed to a later inning in this bull cycle. That's what you're saying.
Things are about to get real junky out here. And here's what's awesome about this. When I tweet these kinds of takes or write posts about these things, which I've been doing a lot of, people go nuts. This is one of those groups, Spencer, that I believe most investors believe is uninvestable. Believe that? Now let me bring you back to
it. It depends on your goals and your time horizon, right?
Does it? Or is there almost always a time where you want to be so overweight these stocks in any bull market? Is it like a crazy thing for ARK stocks to outperform? Can I bring you back to a time? Maybe 2 times. 2020 to early 2021. Off of the pandemic lows to the first quarter 2021 highs.
I was there. It was fun.
NASDAQ almost doubled. Killer. Really good stuff from the NASDAQ 100. Almost double. ARK was up almost 400%. Almost 5x. That was a whole year. Now I can go back. I can go back to another time. Do you remember, Spencer, 2018? What a time. 2017, even better. Remember this? So ARK, off of the 2016 lows to the early 2018 highs, 200%. A triple.
Yeah, that's what they do, though, right?
NASDAQ 100, about 70%. So these stocks have outperformed before. They've outperformed in a huge way before. We could go back and show cycle after cycle where speculative growth was actually the place to be for a prolonged time frame, right? Or like over a primary trend period, in other words. And when you look at this base, this is the same pattern we've been buying on an absolute basis, mind you, in individual stocks for like 2 years now. Right, this rounding bottom reversal, textbook primary trend reversal, and we try to get them in as early stage as possible of a new uptrend. Well, now this is that pattern, but on this relative trend, on this ratio chart, on this theme of speculative growth over large cap growth. While that would sound crazy in an AI fueled revolution, right? How could you go buy the Shopify's and the DraftKings instead of the Nvidias? Nuts, right? That's exactly what the chart is showing us. So why wouldn't we trust this pattern for this ratio chart the same way we've trusted it for every individual issue that's been breaking out of this pattern over the past 2 years? Because buying those patterns have rewarded us very nicely. I think this theme and leaning into it in a big way will reward us next.
Steve, I'd be curious to see this chart zoomed out back another. I don't know when ARK.
Yeah,
I don't know when ARKW was launched. My only reasoning is because there was that crazy post-COVID bull run was like the most epic bull run ever, and I just wonder what, like, all that leftover overhead supply. I just wonder if that will put a dent in what you're saying, because what you're saying makes sense, right? And the pattern is there.
Ton of overhead supply.
Yeah, there are a lot of people that have emotional scars and literal portfolio scars, right? From a few years ago, and they're trapped. And I just wonder what that will do to this pattern, if it will maybe slow it down, put it up. He says, let's put it up.
You're right. There's a ton of overhead supply, but another way to look at that is this ratio has 3x to go from here to get back to those old highs. It's absolutely fallen off a cliff. But I think the more important point looking at this chart and zooming out and reading it from left to right is look at, 2017, after we came out of this base on the left-hand side of the chart, right? From March of 2017 to May of 2018, just a straight line of outperformance from these stocks, right? And then you had a lull in 18. We had a bear market, 2018 into 2019. Off of those COVID lows in 2020, like I said, this ratio goes from 25 to almost 60, right? So we've seen these periods before. So we shouldn't think that like this is impossible or that these stocks are uninvestable. No, these stocks are usually leaders at some point in every cycle. And I think we're going back to that place. And it's not crazy.
It's not crazy, but this is like the steepest climb it will ever had to make. So it's sort of like untested in this regard. But you're right, it is possible, right?
Palantir's chart looked like this at one point. Uber's chart looked like this at one point.
Coinbase and how long did Palantir? It took Palantir a while. It took it a number of tries.
But the point is, now they're back above that prior cycle peak, right? So that peak in the middle of this chart, we've seen this pattern complete over the past couple of years, over and over and over and over again. And they told me, Spencer, just 2 or 3 years ago, my smartest friends from the West Coast told me, these growth stocks will never see these valuations again. Some of them are already more expensive, above the prior cycle highs. Some of them are above the prior cycle highs and still less expensive because they just turned on their earnings. Shout out Palantir, monster, right?
So,
but others are already more expensive, and they're back there.
So
and when they broke out, hold on, when they broke out of these bases, people looked at them and said, "That's crazy. You're buying Coinbase here at $40, $50 a share? It'll never go back to those old highs. It's probably going to hit those old all-time highs this week." And this chart will probably go back to those old all-time highs, and everybody will tell you it's impossible the whole way.
Okay,
Can't wait.
Here's what we're really talking. We're talking about ARKW, right? So what we're really talking about here was we're talking about Coinbase, we're talking about Roku, we're talking about Roblox, Robinhood, Palantir, Meta.
Give me all of them. I want all of those.
Yeah. Well, half that group has already gone. That's what I'm saying. Right?
They're breaking out. This is breaking out too. All of those charts that you just named saying they're already gone, that's confirmation. That supports what we're seeing here. That says, yes, this will probably be a valid resolution. Meanwhile, all the biggest tech companies, look at Nvidia, look at Semiconductors, are rolling over. So you're right. One of these groups is completing primary trend reversals, and the list is growing every day. New uptrend, new uptrend, new uptrend. You just named 5 of them off the top of your head. And the other group is making new multi-month lows, breaking down. People are saying, oh, I'm worried about semiconductors. So buy the ones that are working.
And just to be clear, I didn't name 5 random ones. I just put up the top holdings, right? The top holdings in ARKW. Well, actually, the largest holding is Bitcoin.
Hey, shout out Dawson. I don't know how you have any money left, brother. Woo! Bring Kenny on.
Kenny said he's sneezing too much today. True story. He said he can't stop sneezing.
Shit. The jet. Wow. I wonder if he faded the jet. Can you ask him if he faded the Jets first of
all? Yeah. Did you at least
ask him if he faded strength in the Jets?
Okay.
They mean reverted right back to VWAP and below.
All right. We'll see. We'll see what he says. No, one thing I want to add though about crypto that we jumped over, and I'm sure the chat's brought this up, is my favorite thing about the crypto right now is that it's happening right before Thanksgiving, which is a very significant holiday in crypto, right? If you think about prior Thanksgivings, the Thanksgiving of 2016 was like the first one, right? You all remember that, right? You all remember Thanksgiving 2016, and after and it went to 20 in the next like 6 weeks, right? We were all there. It was fun.
We'll do some work on Thanksgiving and holiday seasonality, but you're right, Spencer. What you're really saying is that the holidays are for the cryptos. Dude, and they are.
Thanksgiving is it might as well be a crypto holiday as far as I'm concerned, right? Because everyone is going to get with their families and their friends, and they're going to talk about the Doge and the dog with hat and the peanut the squirrel and what's going to happen the Monday after. I don't know. But if years past are any guide, then the time into and out of Thanksgiving is a good time for crypto. Exactly, Caleb. Always a great time of the year in general, but especially so for crypto. So that excites me. The fact that we're getting this huge run up and beginning stages of euphoria into this holiday. And I did see a chart this morning from I think Bank of America that crypto funds saw outflows. I think, was it last week or the week prior? Whatever. A couple weeks of outflows does not make a trend as far as I'm concerned, especially when the market's run up like it has. So
Spencer, we've been pounding the table about this even before the election, well before the election. Right? We've been talking about this. We've been talking about the Q4 rally, and everything continues to fall into place and set up for it perfectly. We're not even extended here. Past couple of days, the sell-off that we've seen, I think that's constructive. You don't want to move in a straight line, right? It doesn't ruin the momentum that we experienced after the election in a lot of groups. Some have given it back. Shout out biotechs for falling off a fucking cliff last week. But everything is falling into place perfectly for this Q4 kind of rally, window dressing, big chase into year end, crypto Christmas. I'm so excited.
Wait, I have a question about that. So let's say that you're in one of those groups that are not playing ball right now. Metals, biotechs, healthcare in general, right? Right. Goodbye?
No, goodbye. So I got stopped out of like 6 or 7 biotech positions last week, and it was wild.
Me too.
A lot of them were already winners, right? And I'm just kind of keeping them tight. Some of them had worked really well already, but like it was like Friday was like bing, 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 bing. I was just selling biotechs all afternoon.
Yeah.
And frustrating. But I wrote about it Saturday morning. I haven't put anything out yet. But there's just no space in your portfolio right now for that kind of price behavior. There are times where you can tolerate this messy type of shit, right? But right now, in an environment where everything's working and more things are working every day and trending really well, and we're getting these reaction legs higher, and if you're in short-term trades, the absolutely rocking out of these bases, fantastic. There is zero room in a portfolio for the kind of price behavior that we saw from biotechs last week. This is a zero tolerance bull market. Too much
because you don't actually get periods like this all the time, right?
Dude.
And when they happen, you have to make the most of it, right?
Yep.
And if you're sitting there as I was until Friday, PPH, right, the pharma ETF, you were sitting there and just wasting away doing it. It's like
it's more than just opportunity cost, because in this kind of market, I think Mary told the story well as just a retail investor, that she was basically like leveraged to the gills ahead of the election. Like you really shouldn't have much cash laying around right now. You should be in something, right? Earning some sort of return in this market. So if you have it in something that's, absolutely not trending well, like biotechs the last 3 or 4 sessions, it's got to go. It's not just opportunity cost. There's a capital cost there too.
Yes.
It's one and the same, but think of it as like that's money that could be somewhere else.
As you like to say, you got to make hay when the sun is shining. The sun is blasting right now,
and it is hot out here.
It's hot.
Yes,
it's
so
really
good.
Hot.
Any headlines? Is there any like sort of news? Do we have to talk about anything?
Yeah, there was a headline over the weekend from Nvidia. I guess there's a problem. Problem might be a strong word. Maybe it's not. I don't know. But it's definitely a negative headline about their Blackwell chips that are causing some overheating issues. This is just one headline in a large scope of headlines, right? So, but
didn't we learn? So this is the AI chip, though, right?
This is the AI chip, and the thing about Nvidia is like no one is especially close to them on this front, so like they can probably afford to like take things slow and make sure they get it right, because they're so far ahead of everybody else in this area.
So think of Nvidia's business as two-pronged at this point. They have their traditional semiconductor stuff that they still do, right? And that's more of like the keep the lights on situation, right? And then the growth is really coming from the data center, the AI stuff these days.
Yes.
They're about to get hit with a double whammy, right? If you think about the fact that there is going to be some sort of growth cliff that we have to fall off. Just the sheer size of what these Mag 7s, right? What mega cap tech is spending to build out their AI infrastructure. If you think that just continues forever, right? At this size, you're crazy. Right? So that's going to drop off a cliff eventually. We don't know when, right? But that growth rate will be significantly lower in the future. Even the big techs can't spend that kind of money, forever. Then at the same time, think back to just a few weeks ago, the ASML report. That was really bad. Remember the guide they gave too, where they told you basically demand for everything else in the world of semiconductors is awful right now. And then ASML stock did like what it did. You could still see it. That's gonna eventually hit Nvidia too. And those two things are gonna hit at the same time. So the market's not stupid. It's really good at discounting these things. And eventually it's going to get to a point where it's like, I don't care how much Nvidia is growing this quarter. I could look out 2, 3, 4 quarters in the future. It's not looking so good.
Well,
I think it's rocket science to be thinking that way right now about Nvidia.
So it's down 2% this morning, but let's pull up slide 6, please, because this is important, right? Slide 6, and let's put this into context, the bigger picture here. Wednesday afternoon, Nvidia earnings. It's right there in the middle of the screen. Wednesday afternoon.
Are we gonna do a thing again? We're gonna do another thing or no? Thing?
I think maybe we should, but I think it's important to point out that negative headlines like this that precede earnings, sometimes they just want them out of the way, right? So keep that in mind. Don't forget that this is kind of the big event of the week.
It's going to be a banger of a report. It's going to be a fantastic report. It's going to be so good. I know that much. That much I know. Ask me how the market reacts.
Well, yeah.
We'll see. We'll see. I will say, though, what a clean level, right? If you can get Nvidia anywhere near 140, you got this nice little range here, 135, 140 zone, highs from early summer, June, July. You got a pivot low here, deep pivot low from late October, around 132.5. That whole zone, 130, 140, there's a lot of price memory there. But at the same time, right? Before I gotta catch myself talking this way, if you're not already long Nvidia,
Well,
you really want to be a buyer here? I don't know, Spencer. Seems a bit long in the tooth to me. Here, let's think about it. So coming off the 2022 lows, just 2 short years ago, Nvidia trading for $11 a share, up 1,170%. This cycle.
Let's on the split adjusted. It wasn't actually $11.
I understand.
Okay.
So you want to buy it here? I don't know. You're not early, I guess is my point.
But
I know.
Are you late?
Are you early?
Are you late?
I don't know. I think it's more a question of how late, because a lot of money can be made coming late. A lot of money could be made, from the 7th to the 9th inning. Trends usually look crazy before they end. They don't usually look like this. I'll say that much, right? Just the price chart here, this can't be a blow off top sort of situation, right? We've been sideways for 6 months, 5 months. I don't know. Any other headlines? So big talk, big fuss about who's going to be the Secretary of the Treasury. Oh, there's a report last night. There's a new guy in the running. Are you following the betting markets at all for this stuff? Because I will say, do we have my biotech chart? Can we show my biotech chart? It's on the Twitter. But this was one of the worst weeks in history. And if you go back and you look at this chart of biotech, because Spencer's rolling his eyes. So now I have to give context. Spencer's rolling his eyes and talking about cabinet positions. When you go back, no, let me tell this story and then roll your eyes.
Okay.
When you go back and you look at the biotech chart, anytime there's been this kind of like price volatility to the downside, you can go back and be like, oh, that was the financial crisis. Oh, that was the .com explosion. Right? This was the biotech bubble that popped in 16. Right? Like you can go and mark the chart. Oh, the pandemic. It's like, what's this? RFK is maybe going to make some crazy decisions and impact the cost of drugs and the healthcare industry, like broadly. Like what is this if not for the cabinet appointment news?
I don't know.
So they matter, is what I'm saying. This kind of news matters. My chart proves that it matters. No.
No, yeah, but RFK is confirmed. You're talking about guys that haven't been confirmed yet.
Like he's confirmed. Like that's a done deal.
Is it not? I thought it was he.
I don't know. I have no idea. I'm only marginally paying attention to any of it.
I thought, yeah, like you lose me when you're talking about like headlines about rumored people. That's where you lose me. I don't care about the rumors.
Well, the market's going to start pricing it in based on the rumor.
Yeah,
it is. Yeah, this Besant guy, and then there's the other one, Lutnick, private equity guy, right? Or is he real estate? What's a Howard Lutnick?
Who was the guy that I saw over the weekend?
RFK is confirmed. That's crazy. That's nuts. Oh my God.
Yeah, so call me when they're confirmed. I guess that's kind of where my stance is at.
I guess my stance is like we have the betting markets, which we now know are pretty damn good at what they do, to get an early read on it. So why not? If you're into data and if you're looking for evidence before the news, market's going to move before it, Spencer. It's going to move it's going to move with the betting markets and based on the expectation. And now for the first time ever, we can like track these things. I think we can, at least for now, until they prove that we can't, we can at least for now trust the betting markets for these, cabinet positions and the odds that they're putting out there. It's real money. Yeah. Real money is dictating those odds. Keep rolling your eyes. What else?
I'm not rolling my eyes.
Our worst week in God knows how long since the pandemic. Yeah, he's from Cantor, Lutnick. Their worst week in 4 years because of a government appointment. Maybe. Or what Trump's doing with his cabinet, and you're sitting here saying I shouldn't be interested in what the betting markets are pricing in for the Treasury Secretary? I think it matters.
I'm sure our guest has thoughts on this. Kenny Polcari, Chief Market Strategist, Slatestone Wealth. Let's bring him on.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Kenny, how are you, man?
I'm good. Is my no?
Oh.
Am I good? Can you hear me?
Yes.
Yeah.
Okay, good. I'm good. How are you? I've been enjoying this conversation at YouTube and having back and forth, picking on each other. But I'm good. I'm good. How are you?
Well, weigh in because everybody wants to talk about the election reaction still and the Trump trade and the Trump fade this. And
So,
biotech had some crazy, yeah.
Yeah, well, biotech's getting crushed because of the RFK nomination. I don't think it's a done deal yet, like your guest, like somebody in the crowd said. It's not going to be done until he gets confirmed, right? He's been nominated. Everyone suspects it's going to happen, but until it's confirmed, it's confirmed. And that's true of all these people that he's nominating, right? He's nominating them. He's creating all kinds of headlines and all that stuff. A lot of it, some of it negative, some of it clearly more positive. And so I don't think it's done. Do I think it's done with RFK? I kind of do. And so I think there's a little bit of a negative reaction there. But once again, I think the market's overreacting to what he potentially will gonna do, right? People are worried that he's gonna start eliminating vaccines and all that. I don't think that's what he's gonna do at all, but I think he's gonna be much more cognizant before they just start giving, COVID vaccines and all that shit, saying, whoa, slow down, guys. And I think that's right. Honestly, I think that's true, but it is what it is. One way or the other, I think that we've given back about 60% of that election euphoria that happened in the week after the election as the market's kind of pulling back. But remember, if you look on the chat, you can see we created that gap from where we closed on the 5th to where we opened on the 6th. It was like an 80-point gap that I think needs to be filled. I wouldn't be surprised. I actually want to see the market come in and fill that gap and kind of test trend line support, which is also right in that same range. I put it in my note this morning. I'd have to go back and look at exactly the numbers, look it up on the chat to see. But I wouldn't be so. I'd like to see it come back and fill that gap, kind of churn a little bit before we head into the end of the year, which I think is going to just take us right back to the 6,000 level. I don't think we're going much beyond 6,000. Unless we start getting, eco data that suddenly, gets everyone all riled up again. But I suspect that, we'll probably end the year like S&P somewhere in the low 6,000s and take it from there. But there should be a pullback first. And I want to see a pullback, actually. It would be healthy and good for the market to shake the branch a little bit.
I think that's a great point because the last two, depending where you look, 3 candles, maybe a little scary for some people. But if we kept going in a straight line higher from where we were, then you start to talk about parabolic uptrend.
Listen, trees don't grow straight to the sky. We know that, right? They got to pull back. And while I love the euphoria, look, I'm invested. My clients are invested. So I'm not complaining when the market wants to rally like that. I think it's great. Everyone feels good. But I say to my clients, okay, listen, I hear you and it's all very exciting, but don't be surprised if we see it. And you should want it to pull back because we still have more money we want to put to work. So I don't want to be chasing things at the top. I want to be putting money to work on weakness in the names that we have, right? Because portfolios for us and the names that we have are all kind of the biggest names in the sectors we own. They're large and mega cap names. We're not way out in the risk scale for the majority of our clients. And so we don't have those wild swings the way, maybe a younger client might have, right?
So I love what you're saying here. And from a technical perspective at the index level, a little pullback to the gap zone. This is so orderly. It's really constructive. Even if you look at small caps, right? Look at the Russell 2000. It just pulled back to a shelf of old highs. It's like a textbook read, right? So Kenny, you're looking for opportunities to buy this weakness and basically just run the primary trends higher from here. What kind of groups, what kind of areas, what kind of stocks are you looking at?
So listen, I love the financials going forward, and I love tech. Although I'm not going to chase tech, I'd be looking for we're looking at Nvidia, right? It's down about 15 points off the high, and now they're talking about that headline this morning and some negative news, put more pressure on the name. And Wednesday the earnings are coming out. Look, if that pulls back to trendline support, that's going to represent a 13% pullback off the high. If it pulls back to intermediate trendline, that's 17%. That to me is a huge opportunity, right? When people say, "Oh, I'm going to buy it on weakness," and it goes down 2%, they go, "Okay, that's it. I'm jumping in." That's not weakness as a long-term investor. It might be weakness as a day trader, but as a long-term investor, a 15, a 10, or 12, or 15% pullback for me is what I would look for when I'm putting new money to work on behalf of clients. But again, I'm not a day trader, so I don't take that that stands, right, with my clients. And so therefore I look for opportunities like that. I think there's going to be some opportunity in the financials. Like I said, I think healthcare is a little overdone. Look, healthcare on the year is only up 4% now, right? Because they've kind of crushed it in the last couple of days. Not that it was up big anyway. It wasn't. It was just up under double digits. So it's pulled back. I actually think next year there's going to be opportunity in healthcare because I think they've pushed it down, and I don't think it's going to be as bad if Kennedy gets in there. I don't think it's going to be as negative as the market is kind of pricing it at the moment.
Yeah, I like that. And healthcare too. If you look at XLV, it's pulled back to a really logical level. Is it down big since the late summer? Yeah, it's down almost 10%, which is a lot for XLV. But there's a shelf of highs from 2022, 2023. You could define your risk right there.
And so I think, when you look at something like XLV, which is down 10%, and like I said, those aren't really sexy names, right? The XLV, that sector. It's not like Nvidia, it's not like tech. And so I think, when you look at that in terms of a broader portfolio over a longer term, I think you have to start looking at names like that, sectors like that, because I think that's going to provide opportunity going forward.
Sexy isn't always best for our money, Kenny,
No, listen, sexy is good, right? Sexy sells, but it's not necessarily where you want to be all the time, for sure. Now, that doesn't mean, look, tech is sexy. I get it. I own tech. My clients own tech. They're in tech. They're not overweight tech, and I'm certainly not chasing it up here. But you have to have, and again, depending on where you are in the life cycle and the risk scale, right? If you're in the younger side, 30, 40 years old, you should be much more out of that risk scale. I'm 63, so while I'm still in that risk scale, I pulled back. I'm not nearly at the level you guys might be at because you're half my age.
So will you do different things for different clients based on their ages? Like, will you have
100%? You have to. Yeah. And listen, not only that, I could have a client who's 70 years old, but the money I'm managing for them is for their grandchildren. So guess what? That's money that's out 40 years. So just because they're 70 doesn't necessarily mean that it's going to be a portfolio based around a 70-year-old, because they're telling me it's not for me. I don't need that money. It's my grandchildren. They're only 2 and 3. It's 10 and 15 years out. So you're going to naturally be further out in the risk scale for that money. But if the client says to me, I'm 70 years old and I got $2 million and this is all I got and it's got to last me, you have to clearly be much more conservative with that money for them, right?
So what are some, give me an example of what are some of the things you'll do to address that? In other words, is it the same theme? Like, if you like gold, is the more conservative portfolio in GLD and then the more, risk-friendly portfolio in GDX or the junior miners? Is like that how you're doing it?
No. Well, no. For gold, we'll put them in. Our clients are in GLD, right? That seems that's where we put our clients in GLD. Cool. We're not putting them we won't put a client directly in something like Bitcoin. If they want to go in Bitcoin, we'll advise them on how to do it outside of us, like either in a Coinbase account or whatever. If they want to buy the Bitcoin ETF, that's fine. But if they want to buy Bitcoin themselves and they're going to do it outside of us, we can help them. I can talk to them and we can talk to them about how to do it. But other ways that we're, that I'm managing risk is clearly, again, depending, because everyone's different, right? I love when somebody asks me, well, what should I do? Well, your situation is different from Spencer's situation, is different from my situation. So that's why it really depends on having a conversation with each individual client, because it's not a one size fits all by any stretch of the imagination.
And it's not just about age, like we're talking. It's what are your goals? What's your objective?
Well, what are your goals? Some of it is about age, because when you get a couple of, you two guys are relatively the same age. You've got years ahead of you. You've got at least 30 years ahead of you, right? So you two could have some parts of your portfolio that are very similar because of your age, right? Where you are in the risk scale. But I'm not going to be in that same structure that you are, because I'm 63. So my lifespan is very different at this point in my life than yours is. So yes, you can have very individual conversations, and you should, because to your point, what do they need this money to do, or what are they looking for it to do, and how long are they gonna, how long do they expect that they're gonna need it, and are they planning for weddings and this and that, or bar mitzvahs, whatever they're doing, right, is gonna really kind of dictate how you go right down for each client, manage that money.
So the Bitcoin talk is something I got the shirt on. It's something I've been thinking about a lot lately, and I'm sure you get the question all the time. You're just saying you'll advise on kind of how to do it. I was thinking the other day, because I got rid of all my Bitcoin on Coinbase. I still have a Coinbase account where I'm holding other things, but in terms of where I want my Bitcoin exposure, I want it in my Schwab account or my Interactive Brokers account. And I want to deal with
Right.
BlackRock, not some exchange. I want to own
Okay.
IBIT. I could also own it in my IRA, right? And get tax benefits on those
Yeah.
invested dollars. I can't do
Yeah.
that on Coinbase. So like,
No, you
like, what do you
can't, but it depends on, do you want to own the ETF, or do you actually want to own, a part of a coin or a coin in general, right? Because remember, you can go on Coinbase and you can buy $50 worth of Bitcoin every week or every month, or $100, whatever you want. You don't have to go in there and spend $80,000 and buy a single coin. You can go in there, and that's what a lot of people do, quite honestly. A lot of people that I talk to, they just go in if they like it, they want the exposure, they go in either it's monthly, however they want to do it, whether it's $50 or $100, they mind their own business, they let it happen on its own, and that's what they do. Right. And they build a position over time.
Yeah.
But that's what they want. They want the actual Bitcoin. They don't want to own the ETF.
I think it's crazy. I get it. And I know there are a lot of people like that, but I'm like, I would much rather deal with Schwab and BlackRock and know my money is safe.
Listen, I will tell you a story. I do agree with you. That was probably a week ago. I tried to sign into my Bitcoin account and I got blocked out of it. And I couldn't understand why I got blocked out. And I will say, I started to get a little bit nervous when I couldn't get into my Bitcoin account. And it took me about an hour and a half. I was going back and forth, and I had to prove who I was. I had to send a copy of my license. I had to send it again.
I did that too. It took 3 days, Kenny.
Yeah. And it was a little bit unnerving. I will say it was a little bit unnerving. And I thought to myself, do I really want to do this? Maybe I should, in fact, sell the Bitcoin and buy the ETF and just be done with it. But I didn't. I stayed with it.
You go through that experience once, and you start to realize, oh wow, thank God for Schwab and JP Morgan. They make
listen, there's no doubt. Yeah, there's no doubt. I think if my position if it starts to get really big, because right now it's not really big. It's I'm dipping my toes and keep my feet wet, and I'm anticipating it. But maybe in fact I'll do that. Maybe I'll just decide to sell it and go all in on an ETF via Schwab or BlackRock or whatever, right? Fidelity.
And I think in the future, like it's going to be even better for people like us who would rather go that route, because they're going to have Ethereum, they're going to have Solana, they're going to pay monthly dividend yields, they're going to stake it for you. It's going to be fantastic, and it'll be highly liquid markets, just like BlackRock and the other big players have proven with the Bitcoin spot ETF. So I'm excited.
So which is the one you use? IBIT?
Yes. Yeah, IBIT. IBIT, I think, is by far the best. The most liquidity there. And they just started options for it, right, Spencer? I haven't dabbled, but they got options for it now too. So this is like a real market.
I'm not going to say I looked into all of them and understood which one has the least tracking error. I don't know. I just know that IBIT was first. And when you're first, sometimes that's all it takes.
IBIT is who? Is that ProShares, or is that who? Is that iShares?
That's
BlackRock. It's BlackRock.
Oh, the IBIT is BlackRock. Okay.
Yeah.
Who's ProShares? JP Morgan? JP Morgan's ProShares?
No, ProShares is ProShares.
No, ProShares is ProShares. Oh,
really? Okay. Yeah. And then Spider's State Street.
Yeah.
Yeah.
All right, great. All right, Kenny, what else is on your mind? Are you looking at, how much you're overthinking intermarket? The dollar's been ripping, rates are moving higher, and stocks don't seem to care. Yeah.
Well, yeah, but I think stocks are starting to care. Look, I do think rates are going higher. I think this whole conversation about lower rates coming, I don't see how lower rates are coming. I just don't, because I think we're starting to see indications that inflation is going to heat itself up. And look, I hate to say this because I'm dating myself. You guys weren't even born then. But, when I graduated college when I was going to college, 1979, 1980, 81, when we had just gone through the Carter years, we had just gone through a massive economic downturn, the whole Iranian crisis. Reagan was now president. He pushed the interest rates were 20%. Inflation was running at 13%. Unemployment was running at 10%. It was ugly, ugly, ugly. Now, I don't suspect it's going to get like that. But I do suspect that, remember, they cut rates prematurely back in 1980, and then inflation reared its ugly head again, which forced Volcker to jam rates to 21% and bring the economy to a 2-year fucking horrendous recession, right? But he had to do it. Quite honestly, then you saw prices come down. I talked to a lot of people that said, when are prices actually going to start to come down for the everyday stuff? Guess what? Prices aren't going to come down unless they let the country go into a recession. If they don't, and they keep trying to navigate the soft landing, prices are going to remain elevated. You're going to hope that your wages catch up, but prices are never going to come down. The only way prices are going to come down is if they actually let us go into a recession. then you'll see prices come down. Otherwise, you better get used to just these, prices that are higher. This is going to become the new normal. And that's just the way it'll be unless we go. Now, so that's what concerns me. I do think that inflation is starting to rear its ugly head again. I think the Fed, between Neil Kashkari, a couple of the others, Jay Powell last week saying suddenly he's not in a rush. Although on Friday, Austin Goolsbee, who's very much a dove, came out and said, "Oh, rates are going to be a lot lower in 12 months." I think he needs his head examined. I don't think he's paying attention to what's happening all around. I don't know if he goes to the grocery store every day and buys milk and chicken and steak and whatever. Right? That seems to me to be tone deaf when he said they're going to be a lot lower in 12 to 18 months. I don't see it. And you can start to see it by look what happened to PPI on Friday. PPI was expected to come in hotter than it was the month before. And in fact, it came even hotter than the expectation. And remember, PPI leads CPI because PPI is at the producer level. So if the producers start paying higher prices, they then pass those on to the consumer. And it takes like 4 to 5 weeks for that to be passed on. So watch a December CPI report, which will be the November report, but published in December. Yeah. Watch that to see if we start to see an uptick in the CPI, because I think we're going to start to see that, whether it's in the December report or the January report, and I think that's going to prevent the Fed from cutting rates. I think they need to leave them right here. And by the way, here's the other thing.
So Kenny, not even one more. You're saying no more.
I don't think they should do one more. I don't think they should do one more. I think, listen, I had 325s, which would have been 75. We already got to 75. We did a 50 and a 25. So as far as I'm concerned, they shouldn't do any more, right? And my sense is that rates at 4, I think where are we now? 4.25, 4.5, right? I think that's what Fed funds rate is right now. I think that is right smack kind of at the lower end of what has been historically normal for rate. 4 to 6% rates is historically normal. The markets will do fine at 4 to 6% rates. So for anyone to say, "Oh, rates are going back to 3% or 2.75%," I think they're out of their minds. But a lot of them don't understand, because when they came into this business in 2007 and rates were 0, they held them there for 16 years. Then they think 0 is normal. 0 is not normal. 20% isn't normal. 4 to 6 is normal, and we're right smack in the middle there to the lower end. So I don't think rates are restrictive at all. I think they should leave them, and so therefore I don't see another rate cut. Look what mortgages have done. And Powell cut rates by 50 basis points and then 25 basis points. Mortgage rates are back to 7.5%.
Madness.
Right? And your yield is kissing 4.5%. So this idea that Austin Goolsbee goes, "Oh, rates going to be so much lower," he needs his head examined.
I think Goolsbee, you got to throw out what he says. He's there to just be like the resident FOMC dove. He does a lot of media. I think the other members, like you talked about Kashkari, and I forget who else it was who made some comments last week, they're setting it up for, I think, a scenario like you're outlining here, for at least less cuts than the market's pricing in now. I think we're still pricing in 2 at this point. I
think the market is pricing in 2, but I'd be very surprised. I just don't see it.
I just had a conversation with our FIC analyst, Jason Purz. He'll be on the show a little bit after you, Kenny. And he called me today saying, I think we're only getting 1. I think his head is he's thinking like the way you're thinking, maybe even 0.
I don't think we get another one. I really don't. And I think that Powell is I think he and Kashkari, because I was at a Yahoo investor conference on Tuesday last week, and he was one of the guests. And he got up there and he was talking, we were talking about Fed and interest rates, all that. And he was very, very coy, where he said, "Don't anybody think it's done deal. Don't anybody think it's already, that we've already made up our minds. We have not." And then 2 days later, Jay Powell comes out and says, "Whoa, guys, what's the rush? Why are we rushing to cut rates?" I think they're setting it up. They're trying to get the market comfortable with the idea that there may not be a cut in December. And look, if there's no cut in December and the market backs off a little bit because everyone got themselves all worked up about another cut, so be it. The market should shake the branches a little bit. We'll see who falls out, right? Who's in it for the long term and who gets nervous over that.
Is there anything there with Trump assuming office, kind of in this period before he takes office, where the Fed maybe doesn't want to piss him off or doesn't want to do anything to shake up the market? Is there anything there?
Well, listen, if you want my opinion, I think the Fed already in September, when they made that jumbo rate cut at 50 basis points, I think they did that for a very specific reason. I think they were trying to support the current administration and support, her election. I honestly believe that's why they did it, because because I don't think they had to do a 50 basis point. They could have done 25 and I would have been okay with that, but they came out with 50 6 weeks before the election. I thought was bullshit.
And the data would support that a rising market in the short term before the election supports the incumbent party winning. So that makes a lot of sense.
Correct. I agree. And I think that's what they tried to do, right? I think they tried to seal that by being more aggressive in terms of the rate cut, but I think it was a mistake. But one way or the other, I think that I think that the Trump trade is gonna relax a little bit. I think people are gonna kind of re-examine where they are, where it is, what this looks like as they start to see more nominations. They start to talk about which ones are kind of a shoo-in and which ones are not. Because I don't think they're all shoo-ins. I think the whole Matt Gaetz thing is a whole nother conversation, but I don't think that's going to be a done deal. But I think if you want my honest opinion about that, I think that Trump was trying to show him, thank you for being loyal to me. And now I nominated you. The rest is up to you. I can't force it from there. So if the Senate denies him, Trump can say, look, I supported you, right? I nominated you for being loyal to me. You didn't pass the Senate test. I can't do anything about that. I think that's how Trump gets around that, because I don't think Gaetz is going to end up being the attorney general. I just don't. That's another conversation. But so what I think the market's going to end up doing over the next 4 or 5 weeks is paying attention to who gets nominated, what the conversations are, what's happening. Look, this whole thing over the weekend about Joe Biden now giving Ukraine the permission to use U.S. missiles to fly into Russia. That is not a good development. That's not a good development because Russia's already said if Ukraine starts using U.S. missiles to fly into Russia, then that's essentially war with the U.S. And I think that Biden now has made, why did we do it now? Why did we do it a year ago? Why, if we're ready to do it now, why didn't we let it do a year ago? Now you're going to do it 5 weeks ahead of the new president coming in. I think it's bullshit.
Shouldn't be allowed.
Bullshit.
Shouldn't be allowed at that point.
And so I think that's going to cause some geopolitical issues, and that's going to cause the markets to be a little bit skittish, depending on whether or not this spins out of control or it doesn't. I haven't seen a ton of coverage about it this morning. I mean, they're mentioning it, but no one's really deep diving into it yet. I want to see how that kind of unfolds, and I think that's gonna kind of cause the markets to remain a little bit skittish. Watch the VIX. If the VIX busts up through what I say 1825, which is the last resistance line, then I think it popped right up to the 25 level, which was the high in, I think it was November. I put it in my note this morning, and I think that will cause stocks to come under a little bit more pressure, not fall out of bed, but certainly just come under some pressure. But look, I like the market. I do like the market in the long term. I'm always a long-term bull, and what, my clients are invested. I'm not raising cash and going, oh my God. Now I have cash on the side, new cash that they want to put to work. I'm just not ready to put it to work yet because I want to see how this unfolds. But if the market trades higher, they're participating because they are invested. So it's not like they're not doing anything, right?
But you also like a nice several week or month period of some just sideways.
Well, I think after we had this Trump rally, now we've seen it give back about 60% of all those gains. And now I think the market's going to have to sit around and kind of think about, okay, what's this all look like? And again, I think we need to fill that gap created on November 6th. So that's a little bit more downside pressure. I think the trend line is right there at 57.82. Where are we right now? 58.70. So down 100 points from here, with about a 2% move would be welcome. I'd actually think that that's good. And you'd want to see that, right? You want to see, from a technical basis, you want to see that gap filled. So you want to see them come back down and do that. And I actually think, they're going to. I know futures this morning, Dow's lower, but NASDAQ's a little bit higher. S&P's up a little bit, and the Russell once again is up. But I like the Russell. I like the small and mid cap names. I think they'll do well. Yeah. But if rates don't in fact come down, then the Russell, then the small and mid caps are going to come under some pressure because look, they finance a lot of their business by borrowing money. So lower rates is beneficial for them. So higher rates is not beneficial for them. So you just have to keep your eyes on where you think rates are going. Are they going significantly higher, or are they going to kind of stay right in here? My fear is if we get to 4.5%, I think we kiss 5% and we test it one more time to see how the market deals with that. Because remember, when we tested it in November, or whenever it was, we tested 5%, or May, whenever it was, the market came under some pressure, right? The S&P lost 6 or 7%, the NASDAQ lost 9%, because that then becomes a real choice for some investors, right? Especially older investors. They can lock in 5% rates and they're not going to worry about it, right? So I think those are all the things that are kind of just staring at me in the face at the moment.
Before we let you go, Spencer, you got anything? I got one more question.
Well, I have one that's nothing to do with markets, so go ahead.
I know. What do you want to know? What I'm cooking
You're gonna
tonight?
ask him what he's
Yes,
cooking.
that's what I'm gonna ask.
Yeah, that's
So
better
listen.
than my question about oil and gas.
So listen, I
What are
put
you
this.
cooking?
I put this great recipe. Look at my note. So if you go to my note, right, kennypolcari.substack.com, and you'll see the note, both in written form and video form, right? Because I turn it into a YouTube video as well, and I just walk you through it. But one way or the other, it's this is a great dish, but it's very interesting to make because it's a thin sliced chicken breast, right? You pound it thin so you get it nice and thin. You season it, and then you saute whatever you want to stuff it with. So in this case, I gave you onions, mushrooms, and spinach this time. Saute in a pan with some garlic, a little bit of olive oil and butter. Saute all that, let it soothe out. Then take the chicken breast, get a large ladle, like you would use for soup, a large ladle. Put the chicken breast kind of inside the ladle to make like a cup, so the edges of the chicken breast are hanging over it. Stuff it with the stuffing. Roll the side, bring the sides up and over and seal it. And then turn it over and put it on a cookie sheet, folded side down.
Wow.
And then brush it with a little bit of butter, melted butter, and then I put fontina cheese, grated, shredded fontina cheese on top of it. You could use mozzarella, you could use Asiago, you could use really any kind of cheese you want. I did it with fontina cheese. I put it on top and then put it in the oven. You bake it for like 375 for about 30 minutes. You just want to watch it that you don't start burning the cheese, right? You want it to be nice and golden. And then take it out and serve it just with the salad because all your vegetables are inside. Once you slice it open, all your vegetables are there. It's easy. Wow. I put it in my note. I called it chicken balls, stuffed chicken balls.
Yeah, that's great.
Go slow there, guys.
I have a question about this. You write in your notes.
Awesome.
Wait, I have a question. You write season with S&P. Would you ever season with the NASDAQ?
No, you got to season it with salt and pepper. But and listen, I season it with salt and pepper. You can season it with, you can put adobo on it. You can put anything else you like. Yeah. I'll just season this dish with salt and pepper because then the insides, the stuffing's got the spinach and all the other stuff in it.
Want to clarify is all.
Okay. Beautiful. Kenny, before you go, the fellas in the chat, they want to hear you pronounce Gabagool for us.
Gabagola.
See, now
a lot of New Yorkers go Gabagool. Where's the A on the end? Like they go, it's mozzarella. No, it's not mozzarella. It's mozzarella. It's prosciutto, not prosciutto, right? I mean, I hate the fact that they drop the vowel at the end. That's Italian. You need the vowel at the end. Yep. I mean, my last name is Polcari. What are you going to call me? Polcar? It doesn't make sense, right?
That's fantastic. I mean, really, you heard it here, folks. You heard it here.
Thank you, Kenny. We appreciate it.
All right, I'll talk to you guys later.
Take care.
We did not ask him how to get Kenny energy this morning.
He's great.
Yeah.
Always such a fun interview. And what a cook, man. Like who thinks of that stuff? That's great. It's like basically like a stuffed chicken, like a calzone.
I did drop the link to that in the chat if you're interested.
I'll be checking that out.
Yeah.
We're going to try to run that one this week.
Oh boy. All right. It is 9:31. What did we not talk about today? We didn't talk about Tesla. We didn't talk about Tesla. It's off this morning. There was a headline about surprise, government looking for a revised federal framework for self-driving car regulations that would obviously benefit Tesla. So Tesla was up.
Oh my God! Wait, say that louder. Say that louder one more time for everybody in the back.
No, I mean, are you really surprised? There was a headline over the weekend that the government is looking to revise the current rules for self-driving cars and make it easier for companies like Tesla, which is obvious. Like, if you didn't see that one coming, I don't know what to tell you, right? I mean,
the market did see. Well, Spencer, give the market some credit here. I think it certainly did see it coming. Tesla, one of the best reactions, and it's pretty much held all of those gains since the election.
So it's up. What are we up now? 5.5% this morning. Yeah.
Market's smart. Yeah. Wow. Look at that. And so let me guess, Uber's lower. So Uber has become like this anti-Trump trade now. Just so everybody knows, it really sucks.
Yeah.
I think it's stupid. But that is the case. That's what the price action is suggesting. I don't make the rules. I want to talk about the you got more news? Get through the news.
Spirit Airlines bankruptcy proceedings.
And when save Q?
Soon.
Okay.
Save Q is soon.
I just want to see. All right.
Yeah. Also, I have a couple ideas. I know maybe a little bit late now, based on what Kenny was saying, but it occurred to me over the weekend or maybe Friday. Couple stocks for a Trump trade. We didn't talk about them. Fannie and Freddie, and I know they ran right. FMCC, FNMA. I know they ran up quite a bit after the election, but they've now paused for a couple days. So I'm looking at these two names today. Maybe taking a flyer.
Is it
Fannie.
is it ironic at all that the same week the market comes out and shoots Spirit Airlines, they literally had a plane trying to land in Haiti that like more or less got shot down and had to land in the Dominican?
I did not even hear about that.
Is that ironic at all? Yeah, you didn't hear about this?
No, what?
There was a plane that was trying to fly into Port-au-Prince.
Oh, Spirit Airlines. Okay, I did hear about. Yeah, I thought you meant like a.
Shot at
Okay. Yes.
by the Haitian rebel,
Yes.
and it had to divert its path. A flight attendant was like grazed by a bullet.
Yes.
Okay. Imagine trying to land in a plane like that. And so it had to divert its route, and it landed in DR.
Yeah.
But I'm just saying, like, it's not funny. That's crazy and wild. Like, but the same week that they're declaring bankruptcy, like, I don't know, maybe something there. They got shot down twice. So,
damn, you know what I need is I need that soundbite from The Office.
and what are you thinking though? Like, what are you really thinking when you make the decision to fly Spirit to Haiti?
Dude, I don't know. I wouldn't.
Wow.
I wouldn't. Okay, we have Jason Purse here, but what do you want to talk about before we bring him on?
Talk about living on the edge. ARK, throw up the ARK NASDAQ chart, because there was something in the chat. I was ranting before. I was really ranting because I believe in this thing. It's really real. I think you got to look out for it. But somebody said, how's that going to happen? The speculative stocks working while the NASDAQ's rolling over. NASDAQ won't be rolling over in that environment. I think Kenny just did a really nice job of talking about how we still want to look at large cap tech stocks. They're still going to be working, right? If speculative growth stocks, Spencer, are mooning, the NASDAQ's moving higher, just at a slower rate, right? So when I went back and we talked about the periods of outperformance, like in 2016 and 2017 and 2020, those are periods where both ARK and the broader market, so if this was the NASDAQ or XOK, it would look the same. They're rising together. ARK stocks are just outperforming. You can see it here in 16-17 rally. You can see it again off the pandemic lows. They're both going higher. One's just going higher faster. ARK stocks leading, or ARK stocks or speculative growth stocks showing relative strength over sustained timeframes is not something we see in bear markets, right? When the animal spirits are alive and well, and risk appetite, is improving, and people want to move further out on the risk spectrum, and people want to embrace more and more risk and invest in the most offensive risk on areas of the market. That's an environment where stocks are rising together, right? And there's a broad bull market for risk assets. It's not like, ARK speculative growth stocks are going to start working. Sell your large cap techs; they're going to stop working. No, they're just going to underperform for a change. Good.
And I think the key is the best way to play offense is to find is to go for the stocks and not, like, Steve is not saying buy ARKK, just to be clear.
No,
ARKK,
never.
ARKK will do fine, but if you really want to play real offense, you got to
buy
go.
a firm, buy SoFi, buy Square, buy a freaking Bitcoin miner. Go have a ball, Buy the patterns. Buy this pattern shown here in the bottom right. Buy that over and over again. When you see it, just program your mind, just buy it. Buy now, pay nevers. Perfect. That pattern, buy them.
All right.
No, it's really Shopify, DraftKings. It's these names. They look fantastic. And the bad ones are catching up. Look at PayPal. Look at Zoom.
I was gonna say Zoom. I've been waiting on Zoom for a long time. Not that I'm in it or anything. I'm not. But
how can you not be long like meme stocks in this environment? Spencer, how much GameStop do you own? Do you think it's enough?
I own 0, and yes, that's plenty.
You're crazy. Do you feel like you're responsible? Do you lose sleep at night knowing that you don't own any GameStop?
No, if I want, in the words of Eric Bartunis, if I want a hot sauce, It's not going to be GameStop. That's not my hot sauce. My hot
They
sauce
just launched like a hot sauce ETF or something. Was that based on our interview?
my hot sauce can be anything. It can be meme coins, but I'm not interested in my hot sauce being AMC or
What?
GameStop. I've bought them on several occasions. I made some money, and that's fine. But I don't need that to be my hot sauce.
This
Not
is partly in jest, but also kind of mostly seriously. Like, you don't have to put the bumper sticker on your car if you want to trade GameStop for a couple weeks. You know, you don't have to join the mob. You don't.
I think the longest I've held a GameStop was like 3 days, and that's fine.
It's expensive to hold GameStop exposure. Trust me, I don't like paying this much for calls either. Anyway, I think really we're in this kind of environment where where junkie stuff is really working, and I love. I'm not trying to pick on Dawson. I think he's great, but this is the kind of sentiment that I get when I write about the speculative growth, when I tweet a chart of ARK. It's like laughable. Like, people just can't imagine a world where these stocks work or, God forbid, outperform. And what's funny is that we literally see it every cycle, and then people trip all over themselves trying to get into the trade. And right now, everybody hates it, and the chart is telling us we should love it the most, and nobody wants it. This is the kind of setup that I get so excited over. I really do.
I can tell.
Yeah, we're going back, Spencer. We're gonna have our show in the metaverse, but by 4th of July next year, we'll be holding shows in the metaverse. The next Portfolio Accelerator, 100%, it's in Decentraland. I could feel it coming. It happens fast.
Oh boy, I know it's been 3 years, but I'm not ready.
The parties they're about to have in Miami. Oh God.
All right,
Jason, let's talk about bonds.
Jason, what's up?
That's rude, Steve. Damn.
He usually dips out to get more coffee or get more tea or whatever the hell it is he drinks.
No, I'm right here too. But I also agree with Steve on the idea of ARK. You know, he made that post and I reshared it onto my page, and I had somebody come up and say, oh, "There's no way I'm buying that." And to me, when people say that, that's always a time to, hey, take a look at it. Doesn't mean you got to buy it, but you probably need to take a look at it. Sometimes very speculative things like that, they're the outperformers, and that's where all the money's made, and especially when everybody hates it. I love when everybody hates things.
We've talked about this, Jason. We've done shows. We've both written blog posts about the topic. The most recent that I can think of, I wrote about China. Like, the word uninvestable, it gets me. Like, it touches me. I could be in a crowd. I could be in Times Square. Somebody says uninvestable. I'm like, what is? Like, when I hear that word, I'm like, what? Tell me more, right? Like, China, speculative growth stocks, pot stocks, solar energy. It's uninvestable right now. Like, uranium was uninvestable 3 years ago, 4 years ago. Not even. Coal, uninvestable. Tell me more.
The world was changing. Remember, the world was going to change.
Banks were uninvestable. They're the best stocks. The best.
Literally from that day, you know, we did a video on this, and we did a video talking about it, and we were talking about it was during that crisis that happened in 2023, and you said, you know, I want a crisis with my bottom, and literally that was the banks outperformed ever since. Basically, they were the top 3 sector basically ever since you said that. So
wait, can I say something? And I'm not trying to make a joke here. I'm deadly serious. Some of these spot charts look very interesting to me. I haven't owned a pot stock since like the spring, but some of these look juicy.
I got a story to tell.
Let's hear it.
I'm long MSOS calls.
Dude, I freaking knew it. Dude, a couple of these MSOs, like the larger ones, and you know, there's 4 big ones, right? Yeah. If you just look at MSOS and look at the top holdings, you can find them. These look juicy. I'm not gonna lie.
I mean, you throw a dumpy chart in front of me these days, it's hard for me to not buy it. I gotta control myself. Rachel, stop causing trouble in the chat. And Joe, no, this is I'm not on the booch. I got a friend who's really big on the booch, but I'm so into the mountain water. I just can't stop. Rose thinks I'm crazy. Like, this water doesn't come from the mountains. This water comes from heaven. It just tastes different out of a can. You ever those people they need to drink their beer out of a can? Like Coors Light's truly tremendous, and it's the drinkability of that drink. This is the same thing. Wide mouth, out of a can. It's just got this cool, refreshing. It just hits your mouth differently. It's just no.
I got a sad story to tell. I absolutely hate Liquid Death. I think it's the most disgusting of the sparkling water.
There's conspiracy theories around it. I was drinking it at my barbershop the other day. My barber's telling me about how it's witch water. Like they bless it with witchcraft. He was showing me videos about them doing spells on the water. I'm like, I don't know, man. I don't know about all that, but yeah. Wow.
I heard the same thing about Chick-fil-A. They put crack in their burgers or something.
And they should keep doing it because it tastes good.
Whatever it is, they taste great. So I mean, I'm gonna keep eating it. Either I'm addicted or whatever. But people were telling me that the other day.
I gotta say, shout out Georgia Tech. We were at the game last weekend. It's Chick-fil-A is in the stadium. It was the box was catered. Chick-fil-A everywhere. Just you cannot get away from Chick-fil-A at the Georgia Tech game, and it's really cool. It's really cool because it has
public
stadium food. Yeah.
They are.
What?
Are they a public stock? Chick-fil-A?
Never.
No.
It will never happen.
They
have no reason.
It'll never happen.
No, they don't have an HR department.
No.
No.
All right. Anyway, let's talk about bonds.
Bonds. Did you hear Kenny's interview, Jason?
Just the end of it. Because I was excited. My mother's Italian, so I got to hear about Gabagool and Capicola and all that. So that was cool.
It's great. We had we had a culinary lesson, a language lesson, and a market lesson all in one. Economics, cooking, language, fantastic.
We'll have to go back and watch that because I just caught the end of it. It was super interesting.
Go back and watch for this reason. He's on the same page as you. So Jason and I talked for a minute before we got on air here today, and he was telling me how he thought less rate hikes is where we're headed. Right? And by less, I mean less than the expectation. I don't know if we're expecting 2 or 3. We're probably going to get less. Kenny came on and said, I think your head's at 1. Kenny came on and said, we're done. No mas, no cut next month. What say you?
And my head's more I'm between, you said 1 and 3. I'm between 1 and 2, somewhere around that 2 zone, I think should be the average. If we're looking at it objectively, obviously the rates could come down a little bit more on the 2-year. That spread could tighten up. If we have that chart of that, we could bring that up too. But that chart is, literally 50 basis points right now.
Chart on.
So literally we're 50 basis points between this at the moment. So if you look at
talk
that,
about where we came from though. What was it? Just 100 basis points 2 months ago?
It's more than that. It was over 100 basis points. When we were first talking about this 2 months ago, over 100 basis points. It had a huge spread, and now it's coming back in. And once again, that doesn't mean it's the end of it. There are periods of time where like if the 2 years started to fall hard here, I would change my mind. Somebody the other day on the show asked, was I still long bonds? And actually, we were long bonds a very short. We read about this on All Star all the time, so you guys can check out. If you're a premium member, you can check out what we're doing. But I was talking about the fact that we were probably looking at our bond trade reversing, and then we got the bond trade to reverse. We're actually short bonds in the portfolio at the moment. So once again, you got to really continue to pay attention to the evidence here. If the 2 years starts to fall hard, I would say, hey, they're going to continue to cut. But if it continues to look like this, why would they continue to cut? And not to mention, Powell came out the other day, Steve, I don't know if you heard this, but Powell said, we can approach decisions carefully, no urgency to lower rates. So he just said that on Thursday. Big
turn in the rhetoric. Not just from Powell, but from other FOMC members yesterday. Just talking about that with Kenny as well. And that's what they do. They're masterful at this. And I think Powell's just done a tremendous job at communicating and making sure that the rhetoric is kind of driving the right expectation, or at least the expectation that they want. It's not always the correct expectation. Sometimes they want the market to think something else. I don't think we're in kind of a place right now. But the bigger point is that there was a big gap here. There was a massive divergence, and it's more or less been cleaned up. And if you think about it, right, Fed funds maybe come down one more cut. That puts it below the red line now. And then I would imagine the 2 year doesn't give back a ton of these gains, right? It's probably going to stay elevated around here. And these lines have more or less come in line. So divergence cleaned up, I guess, is the story.
Yeah, and that's a good point. And I think we're still seeing it's there's still some exuberance in the market. People are still interested, thinking that we're going to lower rates a bunch, and it can happen. And once again, I wouldn't fade any of these trends. The trends are, even though we had a pullback last week, the trends in the stock market look intact. Everything looks good. There's a lot of areas to buy. I just continue to stay long all these things. Just pay attention here. Pay attention to these things. See what happens with the Fed. And we can go from there. But also, speaking of something fun, Steve, I did bring some stuff on Bitcoin today. So, and the dollar. So we could talk about that a little bit today, too.
Speaking of areas that have held up the most, right? Call this corrective action since the middle of last week, right? A bunch of areas have given so much back. They're now below where they were before the election. Looking at you, biotechs, others, semiconductors, home builders, right? And then you have groups like the banks, which are just pinged high and tight, and Bitcoin is in that conversation too, giving close to nothing back. In fact, its peers like the Doge just keep running; they don't stop. So, that's me. Dollars.
Yeah, and this chart really says it all. And people keep asking, how do we get Bitcoin to move higher? How do we get Bitcoin over 100K? How do we get it over? We had a target of 180 on our show a while ago, and so how do we get it to those levels? And what I'm illustrating here is we need a down dollar. The dollar's at the top of an end of a range right now. It could be peaking out. We'll see. If it breaks above that range, above 107, I would start to, and really close up there on a weekly close, I would start to get a little bit more bearish on the dollar here. But if we are bullish on the dollar here, but if we start to reverse right here and we move lower in the dollar, I think Bitcoin's going to go over 100K really easily. And what's interesting, and I was thinking about this, Steve, if you've seen anything go over easily. If we see very speculative assets go over 1,000, 10,000, 100,000, they move really quickly after they pass those major levels. So I'm saying that we could probably see Bitcoin make a 20% jump very quickly if it gets over 100,000. Probably 100,000, 120 very easily.
Because blue skies and new highs. And what we mean by that is there's nothing up there. We talk about natural supply zones or overhead resistance. That's built by price memory. You could use Fibonacci extensions, but at the end of the day, there's no memory up here. No one has ever transacted at these levels. Got to do it for the first time. There aren't sellers waiting in the wings, at least not natural sellers, right?
Yeah, and then if we get over 100K too, it's a psychological level. So 100K isn't any price memory; it's just psychological. So
and then you
once you get over this, yes, it usually overshoots those psychological levels completely. So I'm thinking, we start to see a down dollar here. We get over 100K. We run to 120 quickly. It's a very quick 20% move. That could happen very quickly. So it's something for people to keep on their radar. Keep this chart up. Keep looking at your dollar chart. See if the dollar's moving down, see if Bitcoin gets over 100K, and then really step on the gas, hit that 110, 120 level, and then maybe lighten up your position if you're a short-term trader.
Yeah. I mean, I'm just thinking now of the Economist article that's going to come. Bitcoin, 100K. They'll probably be like in the stars and the moons in the background, right?
Yeah. And it'll be way past it at that point. It'll probably be at 200K by then.
What's the thing? The Dolly, the AI artist. Let's ask it to make the Future Economist magazine cover when Bitcoin hits 100K, and kind of prompt it to make it like space themed.
Not a bad idea. Not a bad idea.
I could do it.
Do you use the Dolly? Because
I got the Dolly. The Dolly.
Try that.
Anybody who follows my Substack knows how weird my AI stuff always is, because I'll talk to it for like an hour about crazy stuff and it'll make crazy pictures.
So do you guys dabble at all? We do the chartoons the magazine covers to the chartoons because we think it's important. So I have like a habit of every weekend just kind of checking. Even you could actually do it on Fridays, right? It's like looking at a weekly candlestick early. You could like sneak peek what the magazine cover is going to be. And did you guys notice what Barron's went with this week?
No.
Anybody notice the Barons? Okay, let's put it up.
Ooh, I'm
So
excited
this
to
is
see
one
this.
from the website. This is the one from the website. But this is the cover of the magazine
And then after this, we got to get your thoughts on silver, Jason.
that I bought at the corner store this weekend and didn't read. Here it is.
Oh, it's in Slack. Okay.
By the way, shout out Super Micro getting delisted. It's not easy to do.
Is that why it's up this morning?
It's not easy to do. Apparently, they're trying to fight it.
How Jensen Huang and Nvidia led an AI revolution.
Semiconductors just rolled over to their lowest level in, I don't know, a month and a half. Yesterday, on a relative basis, they're at their lowest level in years. Completely.
I don't know if this is making a commentary. I don't think this is making a commentary, Steve.
You don't think this is what?
Making a commentary on like you should buy AI right now or buy semis right now, right?
So who like at what point do we just have to kind of take the information? Like, are we supposed to like pick and choose and say, oh no, they didn't mean to write a bullish article about Nvidia? This is an objectively bullish take on, you know, the super market leader this cycle, is it not?
No, I think the subhead says it all, right?
Well,
that this was a struggling company and now they're the most valuable company in the world, and this is the story of that, or at least their version of the story of that. This is not this is a backward-looking story. This is not a commentary on the future.
I think what Steve's also pointing to is if you're looking at the charts on top of this, you can kind of come up with a very interesting take here, which is there's the relative strength is looking pretty bad for the semiconductor sector. And there's some other things that are going on under the surface, SMCI being one of them. Nvidia, you know, I'm not as well versed as Kashop. Obviously, he's been on this tear looking at Nvidia, trying to figure out if it's fraud or not. For me, I don't care. That's not how I trade, but it is interesting to look at, and it could really affect the sector if we start to see bad earnings from Nvidia or something like that. But once again, I wouldn't bet against it, but I certainly am on the lookout for I see the relative strength, and the charts look really bad now.
Throw up one more chart, then we'll talk about silver. It's over for semiconductor leadership. Like, it's clear as day. So this is a little cute because I'm using software in the denominator. But you get the same thing. Use one of the broad averages. Maybe not to this degree, but we're talking about some of the worst weeks on a relative basis since the financial crisis. So let me just make this more clear. This is semiconductors versus software. The way I look at this is the most important businesses in the world versus the best businesses in the world. Information in both of these. We could argue all day where we want this line to go from a broader market perspective, okay? But you see leadership from one and then the other in bull markets all the time. However, right now, this ratio chart couldn't be clear. We have had the worst week since 2007 for semiconductors versus software 3 times since July. We've looked back and said, that was the worst week since 2007. And then August came. No, that was the worst week since 2007. And now the other day, that was the worst week since 2007. 3 times. That is momentum. That is a major shift in momentum that suggests exhaustion in the uptrend here and initiation of a new downtrend phase where software stocks should outperform semiconductor stocks over a sustained time frame. Silver.
All right, Jason, silver.
Silver. What do we want to know about silver? There's a lot to talk about there.
The question was, what are your thoughts on silver into year end?
So I think it's very easy to overthink a lot of the things that are going on in the market right now. You know, like Steve was talking about earlier, you see a lot of the things that were leading, a lot of money coming out of those and going into other areas at the moment. And I think that's just a sign of, hey, it's a risk-on environment. Let's find other areas that haven't been doing very well that we can put some money into. So I see gold really kind of holding up right here. It really looks like it kind of bottomed out. It's making a nice reversal. And once again, it's very tied to the dollar. So the dollar saw this huge rally after the election, which almost happens after every single election. People get very excited about the United States. You see either a few day bump or a few week bumps, something like that. And then the dollar usually reverses lower. If the dollar reverses lower here, silver is going to explode higher. Gold's going to explode higher. Bitcoin's going to explode higher. Bitcoin will probably be the outperformer, but gold and silver are going to do very well as well. So I think silver still looks really good. Gold, silver, they hit all of our targets for Sam and I on the gold rush.
Yeah.
Sam and I do a report once a week for you guys who don't know that. On Mondays, we put out a video and a full report on gold and our positions and so on. So that's on the Gold Rush on All-Star Charts. And we hit all of our targets on gold. We hit all of our targets on silver. A lot of the miners hit their targets. A lot of the miners still held up pretty well. It's just the overall sector didn't do well because NEM doesn't look very good. It looks like trash, actually. So if you look at the big ETFs, they don't look very good. So silver, I'm still bullish on it. However, long-term time frame, I'm still bullish. Tactically, you could trade it, buying lows, buying mean reversion, buying at support, something like that would work, or waiting for a new breakout to a new high. So wait for those things, and those things will make you some money. So I do still like silver. I do still like gold, and I still like the miners. I just think they're backing off a little bit, which makes a lot of sense.
But when I zoom out on this chart of silver, like, where's your risk level? Because I see it super clean here against those former highs around 30. I think it's perfectly actionable here from a primary trend standpoint. Why not lean against 30, those old highs?
That's exactly where I'm at. That's exactly where I'm at. So, today, that's why I said today, it looks like you could literally buy it here, put a nice stop right under that low, very close.
I will.
Yeah. Like it's a very simple trade.
I think I will.
Steve will buy anything. I don't even know, but
Say no more. Okay.
Steve's got calls already while I was talking, probably.
We'll run the recess. I got trades to make, I guess.
All right. Tommy Cutlass is back. Steve, my question to you, is the sequel going to be as good as the original?
It never is, Spencer. It never is. I'm almost just disappointed already. But let's go for it. Here, the Giants have one thing to be excited for right now, okay? And that is successfully being the worst team in the NFL.
Oh.
That's the one thing you can get excited about as a Giants fan right now. I would say the other thing is maybe being able to beg Bill Belichick to come back and coach the team and lead the franchise and rebuild. I think that's a long shot, but you have to try. So those two things, number one draft pick, and then, hey, we'll bring Bill back. That could make a very, very, very happy Giants fan this offseason. That's what we have to hope for at this point in the season.
We shall see.
Cutlass.
Jason, what do you got?
Who saw Deadpool Wolverine?
I haven't seen it.
I haven't seen any of the last two, actually. I need to get on that.
I haven't been watch. I never really liked Deadpool that much. I'd watch it and be like, it's funny, and I'd have a good time with it. But this one was really good. Deadpool Wolverine, I would recommend it. And Steve, we haven't gotten to talk about this Catwoman. Is it Zoe Kravitz?
Penguin was epic. And
wait, can we talk about that? So we just binged it. We started watching. We watched episode 1 of Penguin, I think, on Wednesday, and we finished it. We finished it last night. So it took us like 4 days.
Good.
It took us 4 days.
It's good work.
This show was unbelievable.
Thank you.
Yes. Unbelievable.
I'm good at TV. You guys got to listen to me. I'm better.
Steve mentioned it a while ago. I started watching. I'm like, this is great.
Oh, is it good?
It's fantastic. Except for the ending was really messed up. I was like, damn, Victor.
Yeah, Rose. Yeah, she's upset.
HBO. I feel like he's alive.
Dude,
HBO.
I'm gave away too much. My bad.
Dude,
Spoilers.
This is truly like Sopranos meets Batman. They just nail like the Gotham City vibe. It's so great. And what Jason's talking about is, all indications suggest we'll have Catwoman next season. And I think you might not get Batman, and that's okay, because frankly, you don't need him. The first season was all about Penguin's rise, right? So now he's on Batman's map because he's like, he took out the other mob bosses kind of thing. That was first season. So now maybe I think Bruce Wayne probably enters the story at least next season. Maybe not quite Batman.
Wait. Is there going to be a season 2?
I'm so bullish Catwoman. Yeah.
This show, I was like, I want more, but I don't want more because it was so perfect as is.
It was great.
I don't need any more, but damn, was it good? Oh, it was great.
It was
So
so
glad you did it.
Yeah.
All right. Lead us out.
That's what I got. That was my recess. Was watch
that's
the Penguin. If you haven't watched the Penguin, watch the Penguin. It's show
That's
of the
right.
year.
It's the best show I've seen on streaming, I would say, since House of Cards.
That's awesome. It's just awesome.
Yeah.
I like the Yellow Jackets. That's been a good one.
I haven't watched that yet. It's on our
good one.
list. That's
It's a good
coming.
one.
All right,
guys.
what we got today? Job Request Live, 1 o'clock. We'll see you there. Smash the like. Thanks, Kenny, for hanging out. Go make some money, all right?
All right, guys.
I can't take no loss. I don't even know what it costs.